All right, traders, a very warm good evening to you all. This is Avel from the Tradepsyche, and I welcome you all to the post-market analysis, outlook, and expectations from the market for Wednesday. Tomorrow will be markets holiday on the occasion of Holi, right? Although the playing Holi is, I think, day after tomorrow, right? And that's when that's on that day basically you'll play Holi with colors, right? And I'm not sure that why they have kept like they have closed the markets tomorrow instead of day after tomorrow. They want us to not even trade and look at the markets, look at our positions for day after tomorrow, right? So I'll be busy tomorrow. I'll be busy for day after tomorrow. I'll not be available. That's why I'm recording the video for Wednesday today only, right? So in this video we'll discuss that how was the market today, why did we see a huge recovery at the end of the day, whether it was because of Nifty's expiry or whether something positive came from the global perspective, right? We'll also see that what will be some of the crucial levels for the coming week. I'll be attaching the link to my weekly analysis video and the analysis video for the next month, or I mean for the this month of March. Please do watch and try to understand that what levels are crucial. We'll in this video we'll only have a discussion for Wednesday, right? Now, before going to the charts, we'll discuss that what discussions we had in our Telegram group and what analysis we did, right? And post that we'll discuss that on the charts. At the end of this video we'll also discuss the change in OI, right? And we'll try to form a bias whether the data carried over is bullish or bearish. All right. But before starting the discussion, I'll be leaving the link to my Telegram group in the description box below. Do check it out. It's a group wherein we do not share any tips, we do not share any trades, but rather we share the skill of trading, right? So if you are someone new who has just started to trade in the markets, or if you want some guidance in the intraday, live guidance intraday, we share OI data updates, we share that which bias the market has, whether the bias is bullish, whether the bias is bearish, right? We share each and everything, whatever you need as a trader to trade in Indian markets. So do join that group. You will not find that group on publicly open on Telegram, because it's a private group. It has a nominal joining fees. So do let me in the comment section if you are interested to join. All right, so let's straight go to our Telegram group and start with the discussion. All right, so today the markets opened, I think, roughly around the first tick, and I think we had a poll roughly of that first tick would be minus 500, most people said, and pre-open will be minus 400, right? So we discussed that Iran has reached out to US on resume nuclear talks, but this was just a mockery, right? The situation seems to be cooling off. It seemed to be cooling off in the morning, but then I think it was just a gimmick probably. But the biggest point is net gap down in GIFT Nifty was only 110 points or 105 points. But the first tick which markets gave was 934, minus 934, right? And then we discussed change in OI data, totally a bearish open as data expects. No major resistance has been added. No major resistance has been added at 25, 300 and 400, and we could have easily seen the markets straight away opened below 25,000, right? Major resistance was at 25,500, but we could not even cross 25,000, right? Then FI has started to add back shorts with 2 consecutive sessions of adding them. So today's FI DI data will be very interesting, and we'll be posting in our Telegram group, right? And today we discussed that clients, they are aggressively long but expect buy on dips. FIs, they are having sell on rise stance. Pros, they are expecting a negative open but buying from lower levels. Conclusion, we can see a negative opening but buying from lower levels. So if you see what we have essentially seen today, the whole day we were bearish, and exactly around 2 p.m. where the FIs institutional times come, we retraced complete fall which we did the whole day. So the analysis was spot on. Actually the analysis was spot on, right? And then we mentioned, all right, the final pre-open is 500 points. So the poll we took, we did not give minus 500, but yes, many people were correct, minus 400. Many people voted for minus 400. Then the game plan we discussed that opening a sharp gap down below 25,000. After a weekend opening, market always remains volatile. Let us observe and then see levels. Right? Expectation is the market should not break. We technically expected that the market should not break 720. Right? But I think so. Markets took a support exactly around 650, and the first two can three the first five candlestick market took a very good support, right? And the biggest point was India's VIX was up by 16% today, which is a very major thing, because at like VIX at the level of 15 16, option sellers they cannot stay in the market, right? After that, we had carried some shots on a view that we booked, right? And post that we gave a view that and we attached an audio note in which we discussed that this gap should be technically covered before going any much more down. So we gave this view, and then we gave something. Then we gave the OI data change update. Biggest support is 24,800, which the markets broke. Below 24,800, markets went, I think, 200 points more down. So that was something we could have traded, but after a gap down opening of almost 500 points, the system does not allow you to short further unless and until you see a good pullback like this. So the whole day I totally waited for a good pullback, but it didn't come. It came when the market was about to get over, right? Then we discussed that some news came, and then we saw a nice pullback exactly around 2 o'clock. But the biggest part is around 2 o'clock the VIX dropped, but the VIX did not drop exceptionally. Like it should have been dropped when the markets they rise by 300 points. So technically the rise from 24,600 is still 24,900. It's a 300 point rise. So technically VIX should have dropped till I think the level of 15 16, but it closed at roughly around 17. So I'm not at all convinced this rise, but yes, even the global markets were rising. So it was a technical pullback globally, and even in the US and Japanese market, it was a pullback. So you can say that yes, the markets they gave a pullback because the markets are in a mood to short back again, and now you can see this is a technically good pullback, we can say. And the people who are still in mood of sell on rise, they can sell the markets, right? So this was the discussion we had, and this is exactly what the markets did. And if you want to see without any support levels, we opened roughly around it was an almost 500 point 500 600 point gap down. We are opened roughly around 24,891. The low was roughly 24,660, but the close of this candlestick was 893. I think open was somewhere around here. Open, okay. I think open and low only was the same point. Right. So we opened roughly around 24,662, and then from that point only, and this was the high of the candlestick, and this is the close. Right. All right. And the moment we opened, I think we straight went up. And there are two reasons why this happens. That the moment, and I shared the reasons for this strong candlestick at the open. I'll share in this video also. See, it happens because of two reasons. First, the people who have carried shorts, they try to book, so it actually acts a buy order in the market. And secondly, the people who wants to buy on dip, they have their order ready at this point of time. So from two places the buy order comes in the market. So technically whenever we see a very big gap down, the first 2 to 3 candlesticks are green, right? But after this big green candlestick, the markets retraced this green candlestick and even broke 660, the morning low, but it was actually a trap, and then markets moved 300 points up, right? So let's start the yesterday's discussion, the discussion for tomorrow, right? Now we have a big gap on the daily time frame, and the first thing which we expect is the gap to get covered. Now let us go back some point of time in the history, and if you see this area, and if you see essentially this area, you will certainly find some similarities in the price action. All right. We came down in a panic way like this, and then we formed a big gap down. This was the gap created. So if at all, if this gap does not gets covered in next 2 to 3 sessions by Wednesday or Thursday, so Friday again we can see a dump like this. All right. So this is the gap theory. If a gap is created and it is not covered within next 1 to 2 sessions, then I think that gap can remain for a longer period of time. Like if you supposedly see this gap, we have it from here, like from 22 900 to 23 200. Many people anticipated that the markets will come down, but we never came down, right? Because the markets were very strong and markets saw a good support at that point of time, right? So if at all the gap has to get covered, it should get covered by Thursday end of the day, because Friday I think we can see another sell off, right? Now in the weekly analysis video, what we had discussed is this is a bearish closing, and on Friday the data which was carried over was very negative. So it was a natural thing to expect a gap down, because 10 cr shots got carried, and only roughly around after the adjusted data 53 lakhs got unwinded. So actually the markets were anticipating a gap down, and it happened, right? Now from weekly perspective, we are below the weekly 50 ms, so technically this should be a good resistance. Now markets should not take out weekly 50 ma on the upside, because if you see any move below this, markets technically acts like 2 to 3 week on upside, but then one week a big downside comes, right? So what kind of, if I let's not go to day time frame, but if you see what kind of price action we are seeing is strong downside, then slight upside, then strong downside, then slight upside, and this slight upside is getting retraced by stronger sells. It means that yes, bears are active in the market. So now this downside we have seen, so technically with this trend line, markets should this week at least give a pullback like this. So I think tomorrow's candlestick like we can this Wednesday's candles can be like this, Thursday's can be like this, and Friday can be a big fall like this, or maybe next Monday, right? So we can expect this, but do not expect that the markets will go bullish unless and until we go above this level, which is 25,500, right? Now how to trade on shorter time frame, I'll give you some levels, but let's mark above which level the markets can see slight upside on Wednesday. See, the only level which you now need to remember is it's a huge psychological level, 25,000, and it is today's day high also, right? And technically this support, if you see the level of 25,160, it has been broken. So now unless and until we break about 25,000 25,100 zone, we cannot expect any upside in the market. And on the downside, now if you see, we have this zone which has been markets support from very very long time now, right? I'll also, with the zone, I'll also give you a line, and this level 24,500 or 560 is the budget low also. So if this breaks down, if this range breaks down on the downside, then a complete move on the downside gets opened up till April lows of 2025. So this is a very very big risk to the market. And if see, whenever the markets in the past they have come at play like at this level, around this level, within 2 to 3 sessions markets have bounced back. Within 2 to 3 sessions markets have bounced back. Even at this point when markets came, technically at this range, for good healthy longs to get built, this move should have been like very slowly like this, then we could have seen a move like this. But the markets have taken slightly less time in reaching this point again, and after I think only 30 days, this was Feb starting low, this is March starting low. So the markets have not built enough longs at this point of time, and I expect now the I expect that markets should break this level. I want you guys to see one more price action now. On weekly time frame, we are seeing some good price action right now. If you see, if I draw you this range, so technically markets are trying to make a head and shoulders on weekly time frame. Now you can consider another shoulder here like this and then a breakdown. This would be a perfect, or you can consider this as a skewed shoulder like this, smaller shoulder. So many patterns, many things are anticipating, are giving us indication that yes, this will break down. And today the markets have taken a support like this, and to fill this gap, market should go like this. But if at all the markets does not fill the gap by Thursday, I think by Friday next week we can see this price action, right? And why next week I'm anticipating as bearish one, because we will get a continuation of this candlestick like this. 1, 2 and 3, three soldiers, three red soldiers, right? Downside levels I have attached in my weekly analysis and monthly analysis video. Please do check it out, right? So this is one of the analysis. And to for the markets to negate this bearishness, the markets have to first cover this gap and close a daily candlestick above 25,500. Then and only this negativity will get negated. So for tomorrow, what I'm anticipating is markets, for not for tomorrow, sorry, for Wednesday, what I'm anticipating is markets should by Thursday or by Wednesday should cover this gap. This gap is still 25,180. So by the next two sessions, I am expecting candlesticks like this. If any positive news comes, this pullback will be very, very beneficial for sell on rise like this. So don't see, the markets are in a technical sell on rise. Don't think that yes, the markets are going up, the markets will break out and go like this. No. If at all you have to play long, maintain your discipline, play the longs only above 25,500. Don't play the long above 25,180 or 25,200. Because you do not know that after reaching at this point, the markets might trap you and then give you like this. Right? The markets might trap you for 100 points. If the markets are rising, let the markets go till this point. Right? Because this is, if you see technically, which is the next supply zone in the market. This is the next supply zone. So even if the market is coming to 25,350, it is a perfect opportunity to sell the market. And the people who have not sold, who have not got a chance to sell in this, they will sell the market when the markets will reach at 25,170, 200. So unless we cross about 25,500, do not even think of going long. Let the markets go up. The markets can form one more price action, I'll tell you. The markets can do like this. Like this. But above 25,500, you will have till I think 26,000 to trade. This one. 500 points you can easily score. But at least let the markets give you a confirmation that yes, I am bullish. Unless markets are not saying that no, I am not bullish, do not trade on the bullish side. The markets are clearly, I just showed you that markets are clearly sell on rise. So maintain the trend. No, why do you want to go against the trend? The markets will tell it yourself. I mean, the markets will tell itself that yes, I'm breaking out, I'm going from a sell on rise to a buy on dips, right? All right, getting the point. So for tomorrow, the crucial level will be 25,000. Above 25,000, you can expect 25,120. If you want to play this 200, 300 point rise, you can play with a put short. If you are seeing the markets going above 25,000, short 24,800 CE or 24,500 CE, PE, not CE, sorry, PE, to play a slight up move. Because this up move will be a slow one. I'm expecting this up move to be like in 2 to 3 daily candlestick, then a good big red candlestick on the downside. So whenever the markets are moving up slowly on the upside, the call premium they do not get increased much because the VIX starts to fall, right? So the anticipation is the markets should not break prior daily low, which is 24,600 on Wednesday. If the markets break 24,600, first level you will see is 24,500, 24,330. Once 24,330 breaks 24,000 and below 24,000, clear cut 23,000 would be a sharp fall, and below 23,000, 22,000. Right? Upside only about 25,500. Let's go to hourly time frame. Now on hourly time frame, After a long period of consolidation, we have started to give a trend. But today, one candlestick closed above 5 EMA, the moving average we discussed. So technically, the shorts which were initiated at this point of time, if you remember, are technically exited here, right? But the second candlestick has closed at 5 EMA. So now mark this level on hourly time frame 24/7/20. If on Monday, oh sorry, if on Wednesday, if 24/7/20 breaks, first sign will be first sign of weakness will be coming in the markets. You can start adding 1 to 2 bearish lots here, and final lot will be added before below 15 minutes close below 24,600. That's it, right? Small bullishness will only on Monday come above 25,000. Let's go on 15-minute time frame and discuss on the basis of opening. If at all a gap up open happens, it will max to max open till this range. If a big gap up happens, markets will retrace this gap, right, till this point, till prior daily close. Then markets will take a decision that if the markets want to take a buy on dips stance like this, or if the markets want to break this, break 24/7/20 and again go on for sell on rise, right? So if on Wednesday markets open, because for 2 days, for tomorrow the markets will be closed, so we are not sure that what trajectory the US markets might take. So if at all we are opening a big gap up, do not enter the longs immediately. As I mentioned, longs will only come out 25,500. Let the market sustain at this point of time. Let the markets do this if at all they are really bullish, right? If at all we are opening flat, let the markets cross any one level on the upside, on the downside as discussed, and then trade according to that. If at all we are opening a big gap down again on the anticipation that something more serious is going to happen, then I think again the same process you have to follow. On a big gap down, wait for slight reaction, then sell it for like this. All right, lower levels we have discussed on daily time frame. Let's go to and gift nifty is also forming the same kind of price action which I just mentioned. India VIX has closed daily, officially daily above the level of 15, which is dangerous for the market. The last time we did that, I think so, if at all you see, we went till the VIX went till 30. So it is not a good thing. The premiums are very costly, right? Bank Nifty, as we mentioned, the daily Bank Nifty, if at all we close below 20 MA, the technical target will be 50 DMA and 100 DMA, and today almost 100 DMA is achieved, right? And as we mentioned to you guys that Bank Nifty is looking cyclically weak, so Bank Nifty did this downside very quickly. So now this 100 DMA is touched second time in a very short time frame. I'm expecting Bank Nifty to break this one and go till 200 DMA. When Bank Nifty will come at 200 DMA, at that point of time we'll take a decision. But for Bank Nifty tomorrow, any longs will only come above 61,000. Don't try to be over smart and go long roughly when the markets will go up, because you do not know from which point the markets will turn fiercely. The markets might turn from this, the markets might turn like this, the markets might turn like this. So unless you see a daily close above 61,000, do not try to go long in Bank Nifty also, right? If at all tomorrow the Bank Nifty tries to break prior daily low, which is 59,200, try to sell till 57,885. That's it. That's the only analysis you need for Bank Nifty, because Bank Nifty is also looking weak. But yes, the indices, they are looking good for a small pullback like this, and then the markets can go like this, and we have a trend line like this also. So we can see a pullback like this, and then this can be a perfect point to short the Bank Nifty also, right? Let's discuss the option chain. Okay, all right, this is expired, so 10th March will go. 10th March straddle, at the money straddle is roughly around 500 points. So Monday markets are also, because technically yes, the India VIX is 17, the IV is also 17, so yes, markets are expecting some momentum, right? Open interest for 10th March today, more number of shorts, like slightly, I think 40 lakh of shorts are more than I think number of longs, right? So what I'm expecting is FIs would also have today carried shorts. Let's see, the data will be interesting. The biggest number of resistance which was added at is at 25,000. We are currently at 24,860. It means the markets might give you a pull till 25,000 and in momentum till 100. But this area will be a good area to short the market. Bank Nifty. But see, now the interesting part is Bank Nifty has seen addition of 8 lakh shorts and only 3 lakh of longs. It means it's a very bearish setup. So 60,000 will be a very great resistance, but above 60,000 we can see slight short covering till 61,000, but real bullishness will only come above 61,000. So from data perspective also the shorts have been carried for Wednesday, and the traders, the investors, they do not expect the volatility to get over so soon, right? So this was the analysis for Nifty and Bank Nifty and the OI data. I hope you have liked the analysis. If you have been watching up till this time, leave a like, leave a comment. If you have any issues or any doubts about the Telegram group, let me know in the description box below. We are running as of now 90% discount for the ones who want to try it for 1 month. Cheers, stay safe in the market.